Hey everyone, this is Kirk here again at optionalpha.com where we show you guys how to make smarter trades. And today we're going to go over all of the adjustments and closing trades that we had for Wednesday, September 17th. So today's actually pretty interesting. It's one of those times where you have a trade that, again, continues to go completely against you. And that's what we're going to be talking about tonight with our trade in X, which is US Steel. And really, it becomes, kind of actually a big case study, really, in my opinion, and it's definitely one that we're losing money on. There's no doubt about that, but it's the only trade that we've had like this all year, and we're now halfway through September, and this is the only trade that we've had that's kind of swelled to this point because of some news that came out about U.S. Steel last night that I talked about in the video as well. That now created the stock to jump just a couple days before expiration. So we were looking really good. Only 2 days to go before expiration, and then we get this news that U.S. Steel ended up filing bankruptcy for one of its units in Canada, which you're probably thinking to yourself, you know what, filing bankruptcy, that's probably bad news, right? Well, and you would assume that the stock would go down. Well, in this case, and again, this is really kind of the case study that proves almost that, we have no idea where a stock is going to be going or what they're going to do. I mean, take an example like this with US Steel. The stock has a portion of its company that filed bankruptcy, and you would assume that a stock would fall on bankruptcy news, right? I mean, that's horrible. Like, they're losing money hand over fist. They have nothing to do but file for protection. And what you actually get in this case is you actually get an opportunity where the stock actually jumped about 10% today because not having that unit that's dragging down the earnings of US Steel is now removed. So now this company going forward has, kind of cut some dead weight and it's behind it, and now going forward might have better earnings. So that's why the stock jumped. I know I got a lot of questions about that today. Like, Kirk, why did the stock jump? There was no earnings, there's nothing on the horizon. And look, this is exactly, one of the risks of trading individual securities, and you just have to be aware of it. Not that there's anything we can do about it. Nobody could have predicted this. Nobody could have seen this coming. There's nothing we could have done. And we were pretty well set up to have the stock, kind of close in about $1 or $2 range in the next 2 days. And we had this thrown on our laps. Okay, so instead of just closing out the trade, one of my things is, I don't want to close out trades that I still, really believe in and I can do something about. So today, what we did is we ended up rolling one side of the trade completely out and then basically building around that position another huge position around X. So we did increase our exposure in X. We definitely added some more money to it. I know that a lot of people said, you know what, I don't feel comfortable adding to this position, and that's okay. But again, this is why I want to use this as a huge, huge case study tonight, because I feel like this really proves the point, and we haven't had an opportunity to do this. So I'm kind of thankful that this happened, because it really proves the point that people need to realize how much it sometimes takes to protect a position. And a lot of people, I've said it, and you guys know I've said it a million times on these videos and this podcast, it takes a good chunk of cash to protect a position that becomes a loser, because you have to add positions to it, right? It's not like you can just make one awesome, sweet adjustment and everything will be fine. You've got to, really know what you're doing and really add to that position and invest more money in it so it actually protects you. And it's counterproductive, but it's something that's worked for me consistently for a lot of years. And so this might be new for a lot of you guys, adding to this position, but tonight really gives us an opportunity to highlight the fact that there is really no, like, you can go as small as possible on trade entry, because you might have a situation like this where you have to add a lot of positions. Now, our original X position was a fairly small position. I mean, it was about $800 or $900 worth of risk, which if we hadn't done anything, we would have absolutely lost. And now we're taking it to a position that now has, at least $10,000 to $12,000 allocated towards it. Okay, and that's in my portfolio. I know people have done it bigger, some people have done it smaller, but could you imagine if I had done my original position 10 times larger? I'd be looking at possibly having to invest, $100,000 in this position, which I would never do. But that's the kind of thing where you take on a position early and it's too large that you can't do anything about it, and you end up closing it for a loss. And that's one of the worst things that we can do. So tonight, I want you to use this as an example, whether you were in the trade or not in the trade, and we're going to go over exactly what I did. And you can see my profit loss graph now for October, because we, kind of closed out one side of the trade. We're definitely going to make money on the put side of the trade that we had for September. That is clearly going to expire. and be fine going forward. But now we've built this new position around the market as it's trading at about 46.55 or so. Okay, so now that it's made a huge jump higher. So let's actually go back to the actual Option Alpha platform, and you guys can see these adjustments. What I've tried to do here before we get into our trades in EFA and UAL is I've tried to kind of narrow down exactly what we did today. So I know there was a lot of alerts, and that's okay. There's a lot of things moving and shaking, and if you are not comfortable with the alerts yet, please go back and review our fast track videos. Day 1, I believe, is the day that we do like a 45-minute tutorial on all of these different alerts, break them down, the months, the credits, the whatever, so you guys understand this because this is important. But what I tried to do is I tried to break them down and just kind of total up everything that we have right now and as far as the trades that we made. Okay, so I wanted to make sure that I was, giving you guys an accurate representation of what we were doing and what we currently have for the X position, at least in October. Okay, so for X, the first thing we did in the morning, because the stock moved against us to the top side, so because we had a strangle around the market, we wanted to roll out our call side from September to October. Now, physically or mechanically, this becomes a diagonal spread in your Thinkorswim platform or in your broker platform. Not that we're trading a diagonal, but what we're doing is just rolling from one month to the next. And because we did that and changed our strike prices from 39 up to 41, just trying to take advantage of a little bit of the fact that the stock has moved higher, we want to get just slightly closer to it. That's why it's created a diagonal, because you're doing two different strike prices on two different contract months. Okay, so it's not too confusing, but I just want to make sure that you guys understand that. Now, we actually paid a small debit, or a fairly large debit, to do this, and that's okay because we still have a very big value. It's going to act as a great downside protection for us. So we did pay a debit, and that's why it's a negative, but it is a debit. I labeled it a debit on the alert. So we did pay to make this side of the roll, but what we did by paying is actually moved up 2 strikes, or $2 in strikes. And I wanted to do that rather than keep the 39 calls for October because I want to get at least a little bit closer to the market, and I was willing to pay for that, knowing that I have some other credits that I'm going to be building in later on. Okay, so that kind of led us to the fact that we're going to pay a little bit to roll this thing out to next month, pay for more time in this case, but we're going to have an overall, at the end of the day, big credit. Okay, so it still doesn't break our rules for making adjustments, and we want an overall credit at the end of the day. Now, the other trades that we added, and then I'll go to the profit and loss diagram, is that on the top side, we sold 46 calls at a net price of 184. So I took the net price again. Some we sold higher, some we sold lower, but overall we sold 46 calls at 184. On the bottom side, we sold 46 puts right after the market opened, which ended up being okay. I mean, they lost money today, but that's okay. We sold them for great premium and great volatility premium. We sold 46 puts at a net price of about 189. And then again, later on in the day, we sold 2 of the 44 puts at about a net price of about 150. Okay, so once we saw the stock kind of stabilize and maybe it was going to take off again, we want to get some more puts below the market before it headed higher. Okay, so that's exactly what we had as far as positions. And then again, you can see visually on the chart where the stock is right now. So now let's go to the trade tab in Thinkorswim and let's actually look at where the stock is positioned going forward. So you'll notice on the monitor tab and the risk profile here, you'll see that we have 2 different lines. Now, the first line in here is that red line. That's expiration tomorrow for September. Now, you'll remember that we didn't touch these 40 puts that were down below the market. So those will 100% expire worthless. We will keep all of that $96 premium that we collected originally with that spread, and we'll keep that, and that'll kind of be used to offset some of the loss that we currently have in X going forward to October. Okay, so that is in there, and I have it highlighted on the chart. But I'm actually going to take that off the chart so that we can just look at our position for October. So all I've done is just taken that off of the Analyze tab, and now we have our new position for October, which encompasses all of these spreads at all of these different strikes. Now, what you'll notice about this is that, and some of you who are on the trade webinar that we did, the Trading Adjustments Group webinar, is that I think we did a pretty good job of recentering the strategy over the market, which I'm very, very happy about. So you'll notice that the stock closed at 45.70 today. The peak of where we can make back a lot of money on this trade is actually right at 46. So you can see that we just need the stock basically, if it were to just move up about 30 cents and then trade the rest of the month here in October, we'd actually make back everything and then some that we've lost on this trade. So that's where the peak is, and I'm glad that we were able to recenter the strategy over the market. You can see that that's now where we have our kind of oblong shaped pyramid kind of forming here, this mega strangle in X. But what's really good about this trade, because we took in a lot of credit early, is that now we have break-even points that are beyond 49 on the top side, and on the bottom side are beyond 41 on the bottom side. Okay, so we've got a very, very wide strangle that we can make back some money on this trade, and it'll start to decay pretty quickly with these premiums. Ideally, we'd want the stock to stay somewhere between 45 and 47 over the next week or two. And I think it's been known to do that. So let me just flip back to the chart here. And you can see that our big range that now we're working with is 41 to 49, which is above the screen here. It's just kind of just outside of your viewing area above 49. So we've got this big range, and actually the stock can fall back and kind of retest these levels and get back up or rally or whatever the case is. We ideally don't want to hold this thing all the way through October expiration, but if we need to and we need to keep adding to it, we will, or adjusting and closing out winning sides, we absolutely will do that. Now, one of the things I wanted to show you guys is one of the ways that we're going to go forward with adding positions. So one of the things that I like to show you guys is doing this Analyze tab, and right now I just have 5 securities that we have down here that we can add. In this case, and I'll show you both examples, we have 45 puts, which are right around where the market's trading. Those we can take in a credit of about 165 on each of those. Now, here's the thing, right? If we sell 5 more puts below the market, that will then tilt our risk diagram higher. So that will then shift our risk diagram just a little bit higher. It'll move this break-even period out just a little bit more. So this is how you can use new positions to then make changes based on where the stock is moving throughout the month. And this is exactly what we're going to do going forward. So if I just activate these 5 puts here, now you can see that our risk diagram has shifted, and now we give ourselves enough room all the way out to 50 to make money on this trade. Okay, so we still keep most of the strategy centered around 45, 46, but now instead of our break even being 49, we've now shifted it out to 50. Okay, so you see how quickly we did that. Now, if we want to do it on the other side, all we have to do is we have to change this to a call, and so we'll do it right above the market at 46. We'll hit enter and execute this one just as a sample. And now you can see that our break even has moved and shifted way lower than 41. It's now down below 40. Okay, so we took our break even, which was here, and we shifted it out. So it just depends on where the stock starts moving. We can then tilt from this point forward which position we think the stock is going to be going towards and kind of move with the security. At the same time, behind the stock as it's moving up or down, since we have both calls and puts on either direction, we have an opportunity to close out trades along the way and again recenter the strategy. So I know this was a lot of information. Some of you who are probably new are like glazing over with your eyes, which is fine. But this is paramount, and this is such key stuff to understand. And I know it's a big position. I know it can be a little bit confusing. Take the time to really hone in on this. This is one of those bigger topics where it's important that you understand exactly what we're doing and how we're doing it. And even more so than just understanding, it's important that you go through here and say, you know what have I learned from this position? Have I learned that I need to understand more about how strike prices are affecting credits that I'm receiving, whether it's in the money or out of the money, or how to build a strangle or how to make this adjustment. So this is a great tutorial for us. And obviously we're going to be touching back base with this X trade over the next couple weeks. But for me, this is a trade that I'm definitely invested in. I think it's still going to be a good trade, and I've clearly invested money in it. And we're closing out other trades. We have had a great month closing out some winning trades. And this is one of those ones that we've got to protect, and you got to have dry powder to do that. So I hope that was really helpful in that regard. All right, so I know I've gone over just a little bit. 2 quick trades I want to go over before we get to the end of this video is EFA. So EFA is one of these broken wing butterflies that we originally did. We closed out this trade today for a 17-cent credit. And you'll notice that we actually took in a profit that's greater than the credit that we sold it for. So you're probably asking yourself, Kirk, if you only sold it for 17 cents, how did you make more than what it's worth right now? And the reason is because when we did the original broken wing butterfly, and you go back to that video tutorial, we actually entered the broken wing butterfly for a credit. So we got paid to get into this trade and we got paid to get out of this trade. And basically, we just got out of this trade because the stock was heading closer to 65, so it gave us an opportunity to make more money than our original 8-cent credit that we took in. The other trade that we adjusted today is UAL. We had one slight little adjustment to UAL where we basically threw a vertical, so the actual logistics of it was actually selling a vertical. We sold the 50 and then we bought the 49s, but we were already short the 49 strike puts, so we ended up closing out the 49 puts and entering new 50 puts for a total of 31 cents in credit. And you can see that I said here, we basically rolled up our put side from 49 to 50. Now, what did that do for our position? Well, that actually for UAL, and let me just go to that chart here. For UAL, what that did to our position is just readjusted this peak here in our profit loss diagram right over 49. And you can see the stock closed just a couple cents below 49. So what we'll end up doing tomorrow is trying to close this trade out early, get as much value as we can out of the stock because it'll start to really dry up a lot of the premium. But this adjustment that we made took in additional credit and recentered, just like it did for X, recentered the strategy over the market, which is exactly what we were looking to do. So hopefully that makes sense on this one. It's a very unique adjustment, but we've made 2 adjustments in UAL right now. All the time taking in credit, we banked a credit and we took in a new credit. And then tomorrow we should be able to close this thing out at a nice little profit. So as always, I hope you guys really enjoy these videos. Like I said, this X trade, while I'm not happy that it moved against us, it, as a teacher and as the guy who runs Option Alpha, this gives us a huge opportunity to learn from moves like this about how to make adjustments and how to make trades. And yes, it's a lot of information. Believe me, I know it. But this is such good stuff. This is such a good learning tool that I hope that we're going to get a lot out of this. And obviously, hope that we can turn this trade around and either make less or make some money on it or at least reduce our loss even more. So as always, hope you guys enjoy these video alerts. Let me know if you have any comments or questions in the membership area, and happy trading.